Hello, swing trading chart analysis for beginners. So we recorded a video where we pick a random stocks from our long list of stocks BCE, and we are going to practice how to analyze the chart for it. So when you pick a stock like that, or you come across a stock and you went through your analysis using a maximum monthly chart to see if it's an upward stock for you to have on your watch list, on the maximum monthly chart BCE. Okay, so for this particular one, we recorded the video on it, but we didn't click on BCE to actually see that BCE. So you see, now that you put it on your maximum watch list and you look at it, the maximum, let's make sure we have maximum monthly watch list. You look at it, you can see the price is selling now where it is. If you put your mouse on there, you will see the line. You can see all those areas that are above it. Therefore, it's not a good stock to put on your watch list to swing trade. I had to say it's kind of level though. It's kind of level. There is not, yes, from the beginning to the end you have growth to it, but that's what I like about think of stream maximum monthly chart compared to chart swap monthly chart. The monthly chart on the chart swap show us, because it was showing us since 82, we couldn't see this area well, but it shows that it was a growth and dip. On chart swap for maximum monthly, we are looking at this and we say, okay, this is not a good one for us to swing trade. So and therefore you should not put this on your swing trade list. So we have it on our list, let's see, but we have it on the list. It's a growth and dip. It meets all of our criteria to the last one, that is not, the price is here. We have too many mountains above it, therefore it's not a good stock to trade. But we are going to use it to practice the chart analysis, since we created a video talking about BCE. So to analyze this chart, you'll go to maximum daily chart. So you see, the maximum daily chart will show you pretty much the maximum that can fit your screen. And we want to do from, because it's November now, we want to do from January to now. So January to now, let's go to, I'm looking at the axis here, and somewhere here will be. So let's zoom a little bit. When you are zooming it, it can be, that is still here, it can go off your screen. So 2024, and we have January here. So let's zoom a little bit more. Okay, so now we are seeing the month. So what we are going to do is we are going to scroll. We are going to scroll until we see January, and it's going to hide some of the bar too, which is good. And again, these stocks is not a good one to swing trade. When I was recording the video, before I was on another stocks that was not BCE. But again, BCE, you saw the maximum monthly chart of it. It is not a good one to add to your swing trading list. It's not on our short list. Our short list that we trade is not on it, but it's on the long list. Oh, that's why it's good. The one that you didn't care for, you can just take them out. I did the analysis using chart swap, and later I used Thinkorswim to curate it to one that I like, and I think it fell off of it at some point. So we went to multiple iterations to get it to the short version that we trade. But this one was number 1 step to number 2 to number 3 and 4th. So Thinkorswim, I think we use Thinkorswim to analyze the monthly chart and eliminate some, and the one that we kept, we moved them here. But again, I did it a while ago. So BCE, now we have 2024 here. Is it? I'm seeing 2023 here. 2024. Okay, so we are at the right spot. So what we are going to do is, you are going to apply your swing trading strategy. So what we are going to do is, let's say it's 2023, it ended. So 2023 ended, it pulled back, and are you going to buy it? So because the strategy we use is, we buy at the first green bar after a pullback. So it's good to trace your trend lines. So we are going to trade some trend lines here. Again, it's telling you that this company is not a good one to trade, just because you can see that it's going downward here. But anyway, let's trade some trend lines here on the maximum chart. And when I'm trading those trend lines, I'm trying to start with a low, and I will connect it to another possible, another low. But I connected, you want 2 points, and pretty much that is, if I join 2 here, or if I started from here, going, just line up those 2 pullbacks will trace this line. So it's 2023, it went up, so it pulled back. A good way of doing this is, if you hide what is going on, let's go do that again. And now let's go this route. So it pulled back, and then you have the first green. If you say, okay, at the first green you are going to buy, you buy. Usually we buy the 3rd day, we sell it, or if our minimum profit of $25 is reached, we sell it. So the 2nd day it went up, the 3rd day it pulled back, so we may not sell it. It went up. If we bought it somewhere here, maybe we still negative here, it pulled back, it went up, we'll sell it here. So you sell it, and then you wait for another pullback before you get back in. So it continued to go up, and then we have a pullback to the trend line that we trace, and then you have the first green bar. based on our rule, we'll get back in here. So you get back in there, you bought it. The second day it pulled back on you. It pulled back. It went up, but not enough for you to make profits. It went up, but maybe not enough for you to make profit either. And you don't want to sell it at a loss. So the next day it pulled back. The next day it pulled back. The next day it went up, but not enough for you to make profits. The following day it pulled back. It pulled back. It pulled back. It pulled back. And you can see we bought it here in January, and it's going down. So it's going to be in the account for a while. And we are continuing it. Let's see about how much we bought it. Let's just say $41 or so, because we are going to lose down. And you can see it went down. It has not gone back to $41. And we won't buy more until we sell that one and start going up, but it didn't reach that $41. It pulled back. Now it start going up. Will they reach it? Start going up. Start going up and then pull back. We didn't reach that $41. It pulled back. It pulled back. Start going up. Start going up. Let's no, let's go down a little bit. Okay, where were we? I think we are somewhere here. Okay, so it pulled back and continue to go up, pull back, and that one is a big raise there, and then start going down. We bought it and we have not sold it yet. It tried to go up, but it's not getting high enough to $41 for us to sell it. And I don't know, do you recall when we bought it? The month? And as you can see, day by day, every single bar is a daily bar. The price fluctuation during the day is represented in a single bar. It tried to go to 41 but didn't reach it and went back down. And this is a confirmation that this stock is not a good one for us to trade. So you can practice chart analysis by doing a bar by bar, and you do a 1 year time frame. And you can see we are in November. We bought it maybe around January or February or so, and we won't sell it because again it went down from that point. At least it might pay you some dividend. And I think we have, I don't know, I think we have, I thought we purchased it for dividend purposes before in the past, I'm not sure. But it's not a good one to swing trade because it is, I'm sure it's a high dividend. Open 2072 is selling at $27. You can see that by using our swing trading strategy, it does not work for those level or downward, those type of level stocks, because it's well suited for uptrending stocks. So you have to test the strategy you are using for swing trading to see if by practicing 1 year time frame with a bar by bar, where you bought it, where you sold it, if you are you are making profit. And in this example, this will not work. These stocks we will buy and we will lose money on it. You will have unrealized loss for a while until it goes up before we buy it before we sell it for profit. So since we use CDNS, I think that's what was there when I was explaining the stocks to put on your watch list. We'll put CDNS back here again and we'll practice with it. So it's the monthly chart, and you can see that the green is close to the mountain, is close to where the current price is. It's an upward stock compared to the BCE. So this one will be on our watch list. So now you will go to the maximum daily chart and you will practice chart analysis, and we want to be 2024 and January here, but we want to zoom and we zoom enough that we can start with this is the first here. So the first here, okay, so the first January 1st 2024 we have a pullback. Good. So let's see if we can here, just bar by bar we'll go to the first. Okay, so it was pulling back, and you'll wait. We see the first bar, that is our swing trading strategy. We buy at the first green bar after the pullback. When it start going up, we have our trend line trace here, and again those trend line is good to trace some on the maximum monthly chart to have the long term, and then you can trade the short one on the maximum daily chart. And for since we have one going on here, we'll stay on it. So we will make a purchase here, and we want to sell when we have 3 green bar, consecutive bar, we sell it, or if our minimum $25 profit is reached, we sell it. And again, it's good to know how many consecutive green bar you want to have before you sell it by looking at what happened previously. So we can go with 3, although we have 2, 3 and more. So the next bar it went up, the next day it went up. Good. The next day it went up, so we bought it here, we will sell it here. Good. So when you sell it, then you wait for that to go down before you buy it again. So let's see what happened. The next day it went up, the next day it went up, so we sold it too early, and that is okay, we lock in some profit. So here we have another pullback. Therefore we are going to trace from this red to join to this red. So we want to see the green bar. In fact, it's good to see a green bar before you trace, that way you know that this pullback is the end of it. So we are not going to do anything there. We want to see the price going up before we can buy. If we see the first green bar, we buy. Okay, so we see the first green bar, so we will trace our trend line connecting this pullback and this pullback. You can see an uptrend there. At the first green bar, we buy. So let's see what happened the next day. The next day it goes up. This jump, I'm sure we'll have $25 minimum profit met. Therefore we should sell it. Based on our strategy, we will sell it. What about you? Will you sell it here? So we do have our minimum $25 profit target reach, sell it, or 3 green bar sell, because after 3 green bar there is a chance there will be a pullback. Lock that small profit in. You see, the third day it starts to pull back. So if you sell it the third day, you will still have profit, but it's good with this huge profit here. If we have $25 profit based on 2,000 per trade spend to buy, we can sell it. So the next day we have a pullback, we have a pullback, we have a pullback, and we see the first green bar. We will buy it here. Therefore, we can trace our trend line from here, there, and prolong it. So we have our first green bar there. We will buy it. So let's see what will happen. It goes up. The third day, well, we can sell it, but again, you can see that there is not much fluctuation between those prices. So we may not reach $25 profit. So now you'll ask yourself, do you want to sell it and lock in $20 profit, $15 profit? Because it's 3 days right there, and there is a chance you can pull back or let it go. So it pulled back the next day, so you lose all of those profit if you didn't sell it. Small they might be, so you have to wait. So we have the green bar, and then we have, so we bought it there, we didn't sell it, and when we have this green bar give us enough profit, we just got out of it because we have 2 bars here after a pullback, and we tend to pull arrows where we sell going down, and we'll put arrow at the bottom where we bought. From there, we let it continue its route, and then we see a pullback. That's a red line, a red bar. A red bar just tell you that the price is open at the beginning of the day. That price is higher than the price the market closed at the end of the day. That means it was selling at a higher price compared to the price it was selling at the end of the day. That price bar for the day will be red on our chart. The day that the bar is green, that means it opened at the price that the price is closed was higher. The price it closed was higher than the price the market opened. The price went up during the day. So we have a pullback here. We have one here, one here. Good enough to trace if we see the green bar. So we are going to continue. We saw a green bar here. We can buy there, and you can trace a trend line, a short trend line, keeping in mind that you have the longer trend line down, and these stocks you are following it up away from the trend line. At some point it might try to pull back to the trend line. Just keep that in mind. Again, depend on your strategy, because I've noticed that if you want to trade it just at the trend line, you might have to wait quite a bit for that to come back to it. So sometimes I follow it, trading it along, but then when you do that, it's going to pull back. If you pull back while you purchase it, you will hold on to it for a while for that to go back up. It's something to keep in mind. So if we go in at that bar, we purchase it, it goes up. We could sell it if you have $25 profit. Alternatively, if you are using $300, it's already over 300 here, but at that time it was less. So you purchase one share, so $5 profit, you will sell it. So let's say you purchase it somewhere here around what, 294, so you'll have $5 profit, you should sell it. But maybe 3 days, if you want to go with your 3 days, the third day you should sell it based on our trading strategy. So let's see what will happen. You see, the next day it pulled back. Okay, so you have 2 reasons to sell it. Your profit was rich. You waited 3 days. You sell 3 days, including the day you purchase it. So 2 more days after you purchase it. You have those 2 chances to sell it, and then it pulled back. So it pulled back, and we are waiting on that first green to get in, but that first green is quite down. But again, it is the first green. Because of that gap, and because of earning causing that gap, it's not a good time to get in. You might want to just wait and see what will happen. But again, you see, I say I won't buy it, I won't get in. But from that day, it went up the next day. Okay, and pull back. My mouse is moving. A pull back. It's trying to get to the bottom trend line. We have the first green here. We will get in. We will buy it there, and we are going to trace this trend line from here to this to see the line that we are trading on. Okay, it went up that day but still kind of low, and then we have a gap here. We will need to sell it. Okay, somebody bought it, somebody sold it here, because two people bought it here, one sold it here, the second one sold it there. Okay, so you want to wait. Okay, those bar, people bought it on those bar. It could be the bar was green during the day but turn red by the end of the day, which can happen as well. So we'll get in on the first green bar, it goes up, and we'll sell it the third day for a good profit. Somebody sold it that day, and then we wait for a pullback, but it went up one more day before the pullback, and then at that green bar we buy it. We sold it the next day, and the following day it pulled back, and then we have the green bar, we will buy it, and then it pulled back. So we bought it, it pulled back, we are just going to wait. Oh, and then we can sell it here. Okay, so we are going to wait on a pullback again before we buy, but it continues to go up. Then we have a pullback, then we have our first green. So on that first green we will buy. And then it pulled back on us, and then it went up, it pulled back but went up enough that we'll be able to, depending on the day, you might have profit but it will close there, so you might still have a loss. So we will hold on to it. It pulled back, it went up, it pulled back, it went up, it went up, pull back, and we have a downturn going on there. So we start having a lower highs. We trace that because we start having a lower lows as well, and we bought it somewhere here, I think. So we will have to wait on it. You see, depending on your strategy, sometimes you might make profits and sometimes you might have a loss, and if you do not sell it, you'll have unrealized loss. So you just leave the stock in the account. That's why it's good to start with stocks that you can invest in long term, and if it's a good stock, you just leave it in the account. It's just that your money is tied there, though you are not going to do anything with the money there while it's sitting on that stock. But if it's paying you dividend, then you might have some few cents. But we bought it somewhere here and it still has not gone up enough for us to sell it. So it's pulling back on us, going up, pulling back, but not high enough. And we just have, some lower highs going on. And then here, we bought it here. We are close to make a profit there, but then it pulled back. Depending on that day that it pulled back, if you have a profit, you could sell it and lock in that profit. But then guess what happened? You have this jump here, and from where we were before, we have this, and you can sell it for a profit. And that is why not selling it at a loss is somewhat worth it, because again, without putting a stop loss, you won't sell it for us. We'll just have unrealized loss in our account, and here we'll sell it for a profit. A month, almost 2 months apart from when we bought it in April to when we sell it in June in this practice. So now we are going to wait for that to pull back before we buy it again. It pull back, and pull back, and then we have that first green. We will get in, we will buy it, hoping it will go up the next day. It went down, then it went up, and from here you might actually, this one may not give you a profit, but this one will give you a profit. You might sell it and lock it in. But then we have the third day as well, and it went up a few more days before it pulled back. It pulled back, and then we can buy it at this green. It pulled back the next day, it went up, but the price was down compared to when we bought it, and then we have a huge gap down to our earning. Again, we ignore earning, we can trade around it, but that is what can happen. It can gap down just like the way it can gap up. So we bought it and we are stuck with it for a while, for another ride, and then it's going up, pulling back, going up, pulling back, and we won't be able to buy it until we sell it. And we can take a look at when we bought it, 318 around July. Let's continue. 318 around July, and so far it's just working at the bottom, not going up. 318, it went up a little bit and went down, went up a little bit and went down. I don't know what we did, but we did something. I think we were in July before. Let's make it a little bit bigger. Okay. So it goes up here, but not enough for 318. But okay, so we have this up here, 312. Don't even know where we bought it anymore, but I think it was somewhere here. So we want 318. It was 3 months in already, and not enough. And then we have this high here, 312, not enough to make profits. Then we have this one, 315, getting close, and then we pull back. So we are still, okay. So as you can see, by buying it in July in our practice, all the way to November 30th, we are stuck with it. So that is how it's good to practice the chart analysis with your strategy for 1 year time frame, to see how many times you are getting it right the first time, how many times you have to keep it in your account because it went down in price before you can sell it, and see how your strategy is working for you. So that is a good practice of chart analysis that times to times you can just do, especially if you are a beginner and you are not trading much. You can just practice 1 year time frame, one bar at a time, guessing where you will buy based on your swing trading strategy, when you will sell it, and see what happened in the next bar when you scroll to the next bar and so forth. But yeah, for these stocks is in our portfolio, we traded. But again, one of my kids bought it and it went downhill from there. So even though it was purchased multiple times for profits, we purchased it again and it went down. So it can happen. Therefore, it's good to start with a good stocks that you can invest in long term, and just keep it in the account until it becomes profitable for you to sell it. So what is your trading strategy? What type of market cap stocks do you trade with it? Will you share that with us in the comments? Thank you. And again, you can lose money swing trading. It is now insured by the Fed. Therefore, choose a good brokerage firm to open your bank account or your brokerage account with them. and start small. Swing trading small, even with $300 or so. You can buy one share of a stock and target $5 minimum profits. If that $5 is more than the fee that the brokerage firm is charging you, and lock in that profit, those small profits, to have your capital again to repeat it. And the more you practice your swing trading strategy, the better you'll get at it. You'll have chance to improve it, to see what strategy is working for you, what strategy is aligned, what strategy is aligns with your risk tolerance and your personality type. Thank you. Thank you. We thank you very much for watching our videos. We thank you very much for your time. We thank you very much for all your comments. And we thank you very much, you all that subscribe to our channel. I'm Afiabi Liberman, Gross of Liberman Consulting L.L.C YouTube channel, and in asub.com, our blog. On our channel and on our blog, we share different ways you can save money and different ways you can make money to reach your financial independence, where you do not depend on an employer to provide for your family. Thank you.